Hi everyone, welcome to Buy Now, Sell Now, the weekend show. I'm Mubina Kapasi, with me is Avan Dabash, and of course this show is dedicated to all you viewers. We get to answering your viewer queries, analyzing your portfolio, and of course getting you top picks for making wealth, as well as of course quick technical recommendations. So let's get started with the show. Today the stocks that we'll be discussing: AB Capital, PTC, as well as result candidate SpiceJet will be discussed today on the show.
Well, not just that, we also have our portfolio advisor segment. So today, T. Radhakrishna's portfolio will be discussed. Let's bring on board our guests who will be guiding us over the next 30 minutes on the fundamentals. Vikas Sethi, MD Sethi Finma, joins in. And on the technicals, we have with us Ashish Kayal, founder and CEO, Waves Strategy Advisors. Well, great to have you both on the show. Thanks so much for joining in. Let's get on board. Our first question for the day. This comes in from S. Nagabhushan from Andhra Pradesh. It's a question saying, I've bought 1,000 shares of AB Capital at a price point of 193. Is it a good time to hold on or sell? My strategy is for the long term. Well, let's get in a view as to how, Vikas, you're looking at this stock based on the overall fundamental setup. You did have a pretty phenomenal set of earnings coming in. In fact, the net profits doubled to a good 208 crore rupees. And pretty much on all parameters, it was a good set of numbers. The AUMs in the MF business was up a good 27%. There was strong focus on the retail and the high margin business. But let's focus on the query at hand. And our investor here is losing out quite heftily. A recent listing, how are you looking at this one? And do you think that the prospects are intact for the long haul?
Yeah, I like the stock. The results declared by the company recently were pretty good. They had beaten market expectations on all parameters, and after that we had seen some recovery in the stock. But the investor has bought it at a high price, is sitting on some losses, but it's fundamentally a very good stock. I would recommend him to hold on to the stock from a long term point of view. I think we could certainly see levels of around 215 in about a year.
Okay, the fundamentals may look good, but unfortunately for this stock, since the time of its listing, it's really lost money, not done very well. Ashish, I understand you may not have much of a chart pattern to follow, seeing as it was listed just in about September or October of last year. It's losing money for our investor. What would you advise him to do?
Hi, see, the overall trend for the stock after the listing has been negative. But one thing that one can consider is that it went to the zone of 143 to 145, and from where we saw some kind of a positive traction happening. So there is a possibility that it might be in the process of consolidation, it might be in the process of accumulation at current levels. And I would suggest him to hold, but with a very strict stop loss of 145, because if that is taken out, again the downtrend will resume. So you use 145 as a very strict stop loss. And from short-term perspective, 165 is what he can expect, and if he can hold on for at least 2 years' time, I think there can be much higher levels can be expected, but hold with a strict stop loss.
Okay, do remember to keep some of those important levels in mind when you're looking at AB Capital. Strict stop loss at a level of 145, a target is 165, and so the call, all in all, is that you can stay invested. Well, next up, we've got our second query as well from Mr. S. Nagabhushan, and this time it's coming in on PFC. Well, here he's holding shares, he's holding close to 2,300 shares of PFC, or 3,000 shares, pardon me. He's bought it at 118. Now he wants to know, does it make sense for him to stay invested or should he completely book out? Well, let's understand, Ashish, first up as to how you're looking at the overall chart pattern. PFC, how are you reading into this one based on the kind of move that we've seen of late? It's currently trading at about 83 rupees, and you know, the last 6 months, so to speak, have been very wobbly for the stock. It's lost quite a bit. It's been on a downward slide, which is why our investor here is bleeding quite phenomenally on his investment. He's bought it at a level of 118. For those of the other viewers who are watching who are in the same boat, what are you advising?
See, I completely agree with you that the stock has moved down drastically, and if you look at it, it made a high around 148 in the month of November 2017. From there, we can clearly see that the overall broader market and the index has, on a net basis, has either moved upwards or sideways. But this stock has broken from 150 levels to and made a low around 80. That shows a very sharp depreciation in the capital of investment that is done. So I would suggest that it's better to be out from such kind of a stocks. and one should always have an exit strategy in place, because unless you have that, you will not be able to make your money either in trading or investment. PFC does not show any kind of a promising picture right now. There is no positive breakout. There is not even an attempt to show any kind of a positive move. So it's best to be out from this stock. Move on to something like CESC, where we can clearly see that at least the long term to medium term trend is intact. Short term can be consolidation, but at least the long term is intact. Best to be out of PFC right now.
Okay, there you have it. PFC is an exit strategy according to Ashish Kyal. Let's also just get in a fundamental perspective on the stock. And because this stock is in a space, well, not directly in the space, but it is very much influenced by the power sector, which of course has been plagued by several problems. What would you advise him to do when it comes to PFC?
Yeah, Mobina, actually, I'm also not bullish on PFC that way, but I feel the stock has been beaten down badly. It's come down to levels of 82, 83, and now the stock offers a pretty good dividend yield, and with the kind of focus which the government has on power sector, the reforms which are being carried out, I think from the current levels it could certainly go up. So I would not recommend a sell on the stock at the current levels. I would recommend that the investor holds on to his current investments, and I have a target of around 110 rupees in a year. So I think he may not be able to recover his losses soon, but then he can certainly trim his losses. So he would, I would advise him to hold on to the stock and exit the stock if it sees levels of around 110 in a year's time.
Okay, there you have it. PFC, both of our experts, Ashish more particularly does have an exit strategy. And that, of course, was a fundamental perspective coming in. Next up, we have a query coming in from Suraj Bhatt from Pune. He says he has 196 shares which he's purchased of SpiceJet. He's bought it at 141 rupees, and now he wants to know if he must hold or sell. Remember, SpiceJet delivered its Q4 numbers, and it looked like a good set of numbers. On the revenue front, it did extremely well, but then, the entire rise in crude prices did get to the margins. Profitability as well was good, and most importantly, the load factor managed to touch a record high. That in itself is a strong indication of SpiceJet. Vikas, first to you then, how exactly do you view SpiceJet in the aviation space, especially when we are seeing the market leader Indigo at this point of time plagued with its own internal problems?
Yeah, Mobina, as far as SpiceJet is concerned, it declared its numbers. The numbers were pretty good. The stock also did posted some gains, but then I feel at the current levels it would be better to hold on to the stock. It's a good discretionary spend story. Most of the airlines companies are doing well. The passenger load factor is also good. The only cause of concern would be the rise in crude prices, but then I think they would also settle down at the current levels and would not go up from here. So I continue to remain bullish on aviation stocks, and at the current levels, when the stock has corrected from its recent highs, I think it would be a good strategy to hold on to the stock. So I would recommend a hold on the stock.
Okay, likely to fly high. That's the word coming in from Vikas Sethi. Well, at least he recommends a hold on the stock. Remember, we've seen the third successive profitable year for the company. It's delivered its highest ever annual profit as well. And the load factor was at a record high, this time in Q4 at about 95%. Let's also get in a view as to what exactly the technicals are showing, whether or not they're mirroring the fundamentals. Does it make sense to stay invested from a long-term standpoint? So, Ashish, going to come to you with respect to that. Not a bad move. It's been in consolidation mode over the last 6 months or so. What exactly would you advise? Do you think it's likely to remain in a range, or are you going to see some sort of a decisive up move?
See, the overall trend for SpiceJet, we have seen a wave up from 55 levels to the levels of 150. And please note that whenever we see such kind of a sharp rally, there is always a possibility of some correction which is happening in the form of wave 2. And that is what we are seeing. I think this should be used as a buying opportunity. There can be some short-term hindrance, but if someone can look at the horizon of maybe 6 months or 1 year, at least 1 year maybe, there is a possibility we can see the stock surpassing 160 and rallying back on the upside. The rally, the up move in the crude prices are also resulting into some kind of a decline in the stock, but that's only temporary. I think it's going to eventually outperform, and we are going to see the levels of 160. On downside, use 105 as a very, very strict stop loss from investment perspective.
All right, there you have it. That's SpiceJet for you. We'll do one thing. We'll take a very short break right here on the show, but don't go anywhere because we're going to be addressing the portfolio with 12 stocks that belongs to a retired investor. Stay tuned.
Welcome back. This is Buy Now, Sell Now. Let's take it straight to our Portfolio Advisor segment. And today's portfolio in focus, we have Mr. T. Radhakrishna's portfolio that we'll be dissecting, giving expert views on. He is 67 years old, retired with a long-term time horizon. So let's dissect his entire portfolio. First up, he's got shares of Strides Arcolab in the portfolio. He's purchased that at 1,096. Close to 100 shares of Venky's. He's got Apollo Hospitals as well in the portfolio. Moving on, there's Force Motors. He's purchased that at about 4,300 rupees. BEML, that PSU features on the list. And he's also got Lupin from the pharma space, 20 shares at best. Canfin Homes is another stock in the portfolio. He's also currently holding Eicher Motors at 33,337. Intellect Design, 165 shares at 235. Meantime, he's got loads of pharma in the form of Wockhardt at 1,057. He's holding on to Glenmark as well as Aurobindo Pharma at 669. So Vikas, you know, at first glance, there's definitely a void of large cap names in the portfolio. It's a full-on portfolio that's tilted to the mid caps. In light of this, let's get in your views on individual stocks. Strides Arcolab first up, Venky's and Apollo Hospitals. How are you looking at the prospects here?
Yeah, I think all the three stocks are good quality stocks. Strides Arcolab is a pharma company which has not performed in line with the sector as a whole because the entire sector is grappling with issues relating to US FDA. And it's trading at somewhere near its 52-week lows, but then I think at the current levels, he would be advised to hold on to the stock. I have a target of 750 rupees on the stock in a year. Venky is again a very good stock. He has entered at the right level, sitting on some profit, but I would recommend him to hold on to the stock. There's been some corporate action in the form of bonus and stock split. My targets are 4,000 rupees on the stock in a year. And the third stock again is related to pharma sector, Apollo Hospital. A good quality stock and fundamentally very strong company, and with the business also seems to be good. So I would recommend a hold even on Apollo Hospital, although he's sitting on losses, and my targets are 1,300 rupees on the stock.
Okay, so all three stocks are whole. Don't be too perturbed about the loss that you're sitting on when it comes to Apollo Hospitals. Vikas has a target of 1,300 rupees. Let's talk about the next three stocks in his portfolio. Force Motors, he's bought this one at 4,336 rupees. Again, it's a stock where he's losing some money. BEML, he's bought this one at a price point of 1,775 rupees. And finally, Lupin, he's bought it at just about 1,550 rupees. Again, Vikas, you know, he's bought all these stocks at a very high price, and subsequently, we've seen all of these stocks decline. I suppose, you know, even these stocks are not bad quality stocks as such. They have been able to give stellar returns to investors in the past, but unfortunately our investor has been caught on the wrong side of the trade. So what would you advise him to do?
Now, as far as Force Motors is concerned, an excellent company, but the only bad part is he has bought it at a very high price. The stock has corrected significantly from those levels. So I would recommend, if he had spare money, he could put in some more than he could buy at the current levels to average his cost of acquisition, but would recommend a hold on the stock. BEML, the stock again, he's bought it at a very high price. The stock went up to those high levels when there were talks of strategic stake sale by the government, but then nothing concrete is coming out of that. So the stock is corrected, and I do not think he should continue to hold on to BEML. The fundamentals are weak. The only trigger could be strategic stake sale by the government, but then that's not certain. So I would recommend a sell on BEML. He should book his losses, and I would recommend him to switch to an auto component company by the name of Jamna Auto, which could be bought at current levels of 95, where I have a target of 115 a year. And the third stock again is Lupin, which is again a pharma stock. The stock has not done well, but then I think problems seem to be over. They would be able to deal with the US FDA issues, and I think it's a fundamentally a good company, and I would recommend him to hold on to the stock. I have a target of 1,000 rupees on Lupin in about a year.
Okay, there you have it. That's the outlook on the next 3 stocks. Let's also get in his recommendation on Canfin Homes, Eicher Motors, as well as Intellect Design. What's the view?
Yeah, as far as Canfin Homes is concerned, again a very good sector. I'm pretty bullish on the housing finance sector, but then this stock has not been doing well. It went up recently on talks that SDFC could be interested in buying Canara Bank's stake in Canfin Homes, and if that would have materialized, the stock would have certainly done very well. But then since nothing has come up, I think the stock has come down, and I would recommend that he books his losses, and would recommend him to switch to an Equitas at the current levels, where I have a target of 225 rupees in a year. The other stock is Eicher Motors, a great company. He has again bought it at somewhat expensive price, but then he's not making much losses out here. But then I think he should continue to hold on Eicher Motors. The company is doing well month on month. Numbers are also pretty good. So I would recommend a hold on Eicher Motors. I have a target of 35,000 rupees on that. Finally, Intellect Design again is a good quality IT company. It's into niche business. He can continue to hold on to even Intellect Design, where I think he could see levels of 275 rupees in a year.
Okay, so it's just a sell on Canfin Homes. Instead, Vikas is recommending a buy on Equitas, but Eicher and Intellect are hold calls. Finally, Vikas, work hard. Nothing working for the company, nothing working for our investor either. He's bought it at 1,053, and it's been almost 2 years since the stock has been trading in triple digits. Glenmark as well as Aurobindo. What's your view?
Again, all three are pharma stocks. So his portfolio seems to be very concentrated on pharma sector, and the sector has not done well at all over the last 1 or 2 years. Although I feel the sector is bottoming out, but then I think he should spread his risk. He should get out of 2 stocks out of the 3 stocks which are there. They are not bad stocks, but then since his concentration is too heavy on pharma sector, I would recommend a sell on Wockhardt. I would recommend him to switch to a stock like an NBCC, which currently trades at around 100 rupees. I have a target of 150 rupees on the same. I would even recommend a sell on Glenmark, and would recommend him to switch to a stock like an IDFC, which I like at the current levels. I would talk about the details of IDFC in the next section when I talk about my long-term wealth creation ideas. And the third stock, Aurobindo Pharma, can be held on to. I think he should continue to hold on to Aurobindo Pharma, where I feel we could see levels of 800 rupees in a year.
Do remember to take note of all of the chops and changes that have been made in your portfolio, and this is only a model portfolio, so please do consult your individual investment advisor before taking any decisions. Next up, let's find out which stocks our experts are placing their bets on and what the view is for the market in the long haul. So Ashish, I'm going to come to you first. We did manage to see quite a decent run up on Friday's session. 10,800 being maintained on the index, a stellar show with the Sensex piling on a good 280 odd points. What's the view on the index in light of the overall elections, the kind of macroeconomic data, and do you believe that the strength that we're seeing is likely to remain intact? Is 11,000 on the card soon?
See, the overall trend on the index that we saw on Friday is definitely a positive sign that the week has been closed finally with a strong breakout. So that's a positive sign, but we are entering into a very crucial week where there is going to be a lot of volatility which is going to observe. One thing that concerns me is the overall breadth of the market, except of the Friday. If you look at the overall breadth of the market of past 1 or 2 weeks, it has been deteriorating. So there has been limited number of stocks that are helping the index on the higher side, which remains a sign of concern. But nevertheless, since Bank Nifty is leading the rally this time, the overall tone is going to be bullish. I would suggest for index as such, the strategy should be buy on dip. So if we see a dip on Nifty somewhere around in the zone of 10,760, one can create long positions, keeping 10,680 as a very strict stop loss. And we can expect a levels of 10,860 on the upside. So that is where some resistance can come in.
Okay, all right. That's of course the view coming in on the technicals. Vikas, let's get in your own recommendations for those investors who want to be in the markets for a longer term time horizon. What is it that you would advise?
Yeah, Mubina, as I was discussing earlier, my first pick today from a long-term point of view is IDFC. It's a leading term lending institution. The current market cap of the company is about 8,800 crores. And the company has plans to sell several of its businesses. It's into AMC, asset management. It has asset management business. It is into infrastructure, asset management. It is into stockbroking. So there are talks that IDFC is planning to sell its AMC business, and there are several suitors for it. Recently, BlackRock, which is a private equity player, has severed ties with DSP and is looking to buy some asset management business. So there are talks that it could buy into the asset management business of IDFC at close to 4,000 crores. Then it's planning to sell its stockbroking business also. There are suitors like IndusInd Bank and Yes Bank, and that could command a value of around 2,000 crores. Then it's the infrastructure asset management business is also being valued at around 1,000 crores. So I think there is a deep value when you compare it with its current market cap. And then to add to it, the company owns stakes in several blue chip companies. It owns a significant stake in NSE. As and when NSE's IPO comes, that would be a big trigger. Then it has its holding in IDFC Bank. So all in all, I think the sum of the parts valuation is pretty higher than the current market cap. So I would recommend a buy into IDFC at the current levels of 55 rupees, and my targets are 85 rupees in a year. The second stock is a lesser known stock. The name of the company is Navkar Corp. This is a leading logistics company which is mainly into container freight stations and rail terminals. This company is well placed to capitalize on the big opportunities which the government would offer with the incentives which it is giving to promote the EXIM trade. And the company has also recently ramped up capacity at its Vapi internal container depot, which would augur well for the company. It's a solid company with pretty strong fundamentals, a healthy balance sheet, absolutely debt free, high return ratios, and it's very attractive at the current valuations. So I like the stock at the current levels of around 160. My targets are 250 rupees in a year.
Okay, and just for our viewers' benefit as well, let's just run you through what Ashish Kayal has picked out. Nestle is a buy with a target at 10,000 rupees. He's got a buy on Cyient with the mid-cap IT. He's got a target price at 940 rupees on that stock. And he's also bullish on Asian Paints, which saw a massive rally post a stellar set of numbers. Stop loss 1220, target 1380. We're completely out of time, Ashish, so we couldn't take your picks on air. But thanks so much for joining in on the show, as well as Vikas. We'll wrap it up right here on Buy Now, Sell Now Weekend. Keep the questions coming. Thanks for watching.